What's up everybody, it's Mike, and today I want to talk to you about how you can execute trades like a machine. Now, in order to do that, there's really two big things that you're going to need to do. The first is to get your trading beliefs in order, and then you'll be able to move on to step two, which is chunking your time. Now, I just released a video about beliefs, and you could go watch that on the channel. If you haven't watched it already, go check that one out and come back to this one. There's also a lot of information that you could get for free on MaraWealth.com. And in fact, we're even going to release a beliefs workbook on MaraWealth.com. So go get on the list and get ready for that book. And if you're watching this later on, maybe it's out already. Anyway, the main idea that I want to focus on is going to be this whole idea of chunking your time. When you are a trader, there's a lot of different hats that you have to wear, right? Like you need to do your research, you need to plan your trades, you've got to execute your trades, and then hopefully you are doing a post-analysis of your trades so that way you can continuously improve. And the problem comes in where you're trying to do all this stuff all at the same time, and that just doesn't work. That's where you're running into all kinds of fear, and you're kind of tripping over yourself, then you're kicking yourself because you didn't let a trade do what it was supposed to do. But if you can get into the habit, and this is a skill, this is a habit that you can develop for yourself, this time chunking habit. You want to have dedicated time for each one of these. So have dedicated time where you are going to only research. You're not planning trades yet. You are gaining a feel of what the market is doing, how the trades are setting up. You're entering the market with a completely open mind. It's kind of like how if let's say you had a cup, right? Or let's say you've got this jar, right? Right now, this jar is almost empty. So let's say you walk in and you have this empty jar. Real easy to go and fill it, right? There's plenty of space in there to fill it up. You're going in with a clear mind. But let's say you already have this idea that like, oh, the market is bullish and I'm going to be looking for this trade and that trade. Well, then your jar would already be full, and you can't pour more in because you're just going to get shit everywhere, right? You're going to have this giant mess. So the idea then is to approach the market with an empty cup, with an empty jar, whatever it is you're going to drink from, and that is how you'll be able to fill it and allow the market to fill it, not your preconceived idea of whatever it is that you happen to see. It's how you're going to let the market speak to you. That's why you want your research to be its own separate thing. Then you can move on to step two, your planning. How you're going to plan your trades. You've done your research. You see that, wow, like the market is trending higher, let's say, and you've found a whole bunch of setups. Now you could start to dig into those setups and start to see which ones are great, which ones are kind of okay, which ones were not so good to begin with, and you toss those aside. Doing all that and planning out your trades, separate planning time for your trades. And of course you'll have some kind of a system or strategy that you're following. You can come up with this yourself. You can model success or whichever it is. Just you want to have a separate dedicated time where you are planning your trades, and now you come up with this plan of, I'm going to enter here, I'm going to exit there, I'm going to take profits over here, I'm going to set my stop loss down there, and I'll exit with a loss if it falls down below that level. All that is in the plan. Then after that, you can move into the execution phase. This is where the market is open, the bell rings, and the only thing that you're doing when the bell opens, between the market's opening and closing, is you're simply following whatever you came on that plan. That's the point of doing step one, the research, then step two, the planning, then step three is executing that plan. right? Like there's no more thinking when the market is open. The only thing that you need to do is execute, right? And this is where so many traders, they get tripped up because they start to try to research and plan and execute all at the same time, and they get tripped up. They start to see what they want to see, and maybe they make a little bit of progress, right? Like they're getting a little bit of a reward, but they tend to go through this boom and bust cycle over and over again. And oftentimes it's related to wearing too many hats at the same time. They need to start to chunk their time and have separate time for research, separate time for planning, separate time for executing, and then you want to have a separate time for your post-analysis where you have hopefully taken notes on your trades and you are seeing, well, did you follow your plan? What were the results of the plans that you did? How did your trades perform based on your plan? You're not just looking at this one trade or that one trade or that one trade or that one trade. You're looking at the entire group to see how they did. And you'll have more than just 4 trades. You should have 10, up to 20 trades that you're looking at in this block, so that way you're not like you're looking at it as a whole, right? You're not like looking at it under a microscope, right? Like my sad attempt at drawing a microscope, but anyway, that's the idea. You want to look at the entire picture, not just zoom in too close to any single one of those trades. Now, this is something that this whole process, this is what we do in our deep dives. We have this deep dive every Saturday morning. If you want to go to those, just go to marawolf.com, check out the events page, and on the events page, you'll be able to see all the upcoming events. And those deep dives, we do 3 hours. We're starting out with research. We're going through the overall market mood, where we're looking at the major indexes across time frames, so monthly charts, weekly charts, daily charts. We're looking at the NASDAQ, the S&P 500, the Russell 2000, the New York Stock Exchange, and the Dow, seeing how they're moving in what directions across time frames. Then we are looking at the number of stocks making new highs versus new lows, because, well, market can't continue to move up if the stocks within it are not also making new highs, right? Same thing on the way down too. So we want to pay attention to what's happening with number of stocks making new highs versus new lows. Then we go through our entire watch list of interesting ideas, as I like to call it, and there's a variety of ways that stocks get onto that list, but we'll go through that list and we see what's setting up, and are they setting up in bullish ways and bearish ways? Well, what exactly is going on? And then from there, right, like that's the research part. Then we could get into the planning phase, because that first research part shaped how we'll come up with the plan. Then we go through the whole plan of like, okay, like here are the setups, what's the reward to risk, how are we going to get in and get out, and there's this whole Q&A and planning during this part of the deep dive. And well, we go through things very, very thoroughly. Then we're ready for the week, right? All we have to do is just follow the plan, execute the plan, and that's it. Then you could go back and analyze it and see how things can be improved. So I encourage you to come to the next deep dive. I'd love to see you there. Thank you so much for watching this video. I truly appreciate it. If you got value from this video, share it with somebody else that you think can use this information. Thank you for watching, and I'll see you again in the next video. Take care, much love, peace out.